like, share and subscribe to this channel. Today, I am going to talk about what is the mortgage stress test in Canada. What is the mortgage stress test in Canada? The federal government has put in place a mortgage stress test in Canada in an effort to help Canadians manage debt loads. The result is that lending by federally regulated financial institutions must require a borrower to meet a certain threshold when it comes to how they are able to pay back their mortgage in the event of any kind of increased interest rates, increased loan amount, or any change in economic circumstance. A borrower's capacity to afford a mortgage in the future is calculated by looking at how much they earn in their current job, any outside income, the climate they live in, and the size of their down payment. The federal government provides some guidelines when it comes to the calculation, but lenders also have their own mortgage stress tests that they need to follow. Canada's federal government is mandating, after consultation with the insurance and banking sectors, a mortgage stress test to help reduce the risk of a housing bubble and irresponsible borrowing. What is a mortgage stress test? What is the mortgage stress test in Canada? First, let's start with understanding what a mortgage stress test is. A mortgage stress test is a financial requirement that banks require potential home buyers to pass before they are able to complete the purchase of a home. It is done in order to verify that the buyer can afford their mortgage payments even when interest rates are higher. The stress test is often used by the lender to make sure that the buyer's monthly housing costs will not exceed 37% of the monthly pre-tax household income. To pass the mortgage stress test in Canada, your bank will ask you for proof of income. This might be a pay stub, tax returns, investment statements, or social assistance program benefits. It's important to be honest about your income when you're applying for a mortgage or renewing your current mortgage, because this is when they do a calculation to determine what you can afford. In Canada, banks have been required to perform a mortgage stress test on clients since January 1, 2018. More specifically, this is a stress test in which a bank needs to determine a person's ability to pay back a loan by qualifying the mortgage loan. To do this, they will ask for a person's proof of income, the most recent tax return, your recent pay stubs. Why was the mortgage stress test introduced? What is the mortgage stress test in Canada? The introduction of the mortgage stress test has been introduced to ensure the cost of your mortgage is more affordable. Canada's federal government introduced the stress test in an effort to protect buyers from taking on more debt than they can realistically afford, as well as to ensure that the Canadian residential real estate market stays on a sound, sustainable footing. The mortgage stress is also to ensure that home buyers are not getting into mortgages that they will not be able to afford over the long term. The mortgage stress test ensures that home buyers can afford their mortgage payments, even if rates rise or their income drops. The lender will review the borrower's financial situation for the last 2 years, including employment income and residential history, and apply a maximum qualifying rate. How does a stress test work? What is the mortgage stress test in Canada? A stress test on a mortgage is a complicated set of financial calculations. It is designed to ensure that the mortgage will be repaid in full on or before the maturity date if the average of the best 5 years of the borrower's annual income decreases suddenly, for example, if the borrower lost their job. The mortgage stress test is a recent addition to the mortgage qualification criteria. The stress test was introduced to Canada by the Office of the Superintendent of Financial Institutions in late 2017, early 2018. At the time, the mortgage stress test required that any new mortgages meet at least the minimum federal benchmark rate. The current version of the mortgage stress test, which came into effect on June 1, 2021, benchmark rate plus 2% or 5.25%. Whichever is higher. How does a stress test affect you? What is the mortgage stress test in Canada? It is important to know how the stress test can affect you. It may have an effect on your down payment requirement, the type of mortgage you are able to get, and the type of home you can afford. For a number of years, the real estate market was going up and buyers could get mortgages with less and less skin in the game. In 2017, that all changed. A mortgage stress test was introduced that has choked the available mortgage dollar, sending it to a trickle. Mortgage lenders have been able to withstand the brunt of the stress test. In areas where real estate prices have been rising, the stress test has made it tougher for buyers to qualify for a mortgage. Without a qualifying mortgage, the home buying process is stalled until a buyer can come up with a down payment. Conclusion about the mortgage stress test in Canada. What is the mortgage stress test in Canada? The mortgage stress test is a measure that Canada introduced to prevent home buyers with a high borrowing capacity from overextending themselves. The mortgage stress test is a new process that lenders will use to determine what can be borrowed for a mortgage. The stress test limits the size of the loan that the borrower qualifies for by comparing the home buying costs, mortgage, insurance and taxes, with the borrower's ability to pay, adjusted gross income, other debts and discretionary income. The stress test was implemented as a safeguard against housing market bubbles and inflation. The stress test is a type of mortgage approval, and it was designed to assess the ability of the borrower to meet mortgage commitments under an economic stress scenario of increased unemployment or decreased incomes. Like, leave a comment, share and subscribe to this channel. Click the link below this video if you would like to read the full article and other articles about real estate in BC, Canada.